starting off with gold and the government's drive to curb the imports. The markets anticipate an import tax on the precious metals may be hiked and may also limit the number of authorized dealers who can import. The budget may also allow banks to buy back gold coins and bars, but at this point in time, it's just a wish list. The markets, of course, are awaiting tomorrow's announcement from the finance minister to see on how much really does go through. For more on gold and expectations from budget, we are now joined by Mohit Kamboj. He is President, Bombay Bullion Associations, and joins us on the show. Mohit, hi, welcome. What are expectations on the custom duty rise this time around? We already have seen 2% of run-up in the month of Jan. Are you expecting further?
According to me, I doesn't see that there will be a rise in custom duty from 6 to any more further percentage, because 6% is really a very high percentage for custom duties, because in 1 year government has increased from 1% to 6%. And if they increase further custom duties, of illegal activities like smuggling will further increase. So we doesn't think that custom duty will increase.
Mohit, what's your sense coming in for the excise duty expectations now? They had led to protest after the previous budget as well. Do you think there's a possibility of it coming in this budget now?
We don't think so, because last year from all over India, from small cities, from B-town, C-town cities, till metro cities, all jewelers, wholesalers, retailers, even bullion merchants had revolted against excise. And they told, we have given government delegation also last year also, that we have accepted increase in custom duty. Taking excise into jewelry business will be getting, a new department into industry, which will lead to increase in corruptions. And in India, small manufacturers and small karigars doesn't have a PAN card also. So it is not possible for them to get excise license. There were many points for which we have protested against excise. We don't think that excise will come this year. If it comes, there will be a there will be a strike, and I don't think so that government will do this year. They will take steps like this.
Watch out for that. But government has been concerned about the current account deficit so much so that more steps could be coming in to curb imports. What, according to you, are the steps that the government can take apart from custom and excise duty?
I think so. According to me, we think private companies, there should be some regulations that amount of percentage of gold they can import against export. Till now, 40% of the gold imported is due to private companies. There will be some regulations against private companies, and what we prefer that government should tell bankers and scheduled bankers and RBI, the importers, the big importers, those who import gold in India, like banks like Scotia Bank, State Bank of India, Union Bank of India. They should only be regularized to import gold, and the newcomers, like in the last 2 years, private players, those who have come, the government have given them licenses to import gold against their export, should be regularized and monitorized. There should be some limitations that will help government to reduce deficit of gold, deficit of currency in India.
Sure, Mohit, that point is well taken. But let's also talk about the gold prices before we let you go. The recent slide and some gains coming into the markets now. How are you looking at the prices going forward?
I think 2 days back there were some reports that American government has said that they are not going to publish more currencies. Q3 the reports are going to be well, and it doesn't need to publish new currency because that doesn't benefit the economy. And yesterday there was some news that further that unemployment has increased in the country, in US and other countries. So we think that there is going to be a further decline in gold. This 1510, there is a huge support in gold. If it breaks, it will go down to 1450 or something around 1475. So this is not the best time to buy gold. In today $1777, $1780. In this market, people should not get into sale. They should further wait for a couple of days or a week time to get a new dip or something like that. They will come across.
Mohit, thank you so much for joining us. So that's the view coming in from Bombay Bullion Association, the budget wish list, and of course the gold prices can decline further before you start buying into them. Let's also get in then Vijay Bambwani. He's author and CEO at bsplindia.com. Vijay, hi, welcome to the show. What's your sense now coming in for the gold prices? Quite jittery as we've seen.
Yes, Manisha, and they're likely to remain jittery, I think, in the coming few trading sessions, especially tomorrow, because the market is fearing import duty hike and some curbs on imports of gold. That might just give you a very small temporary spike up in prices if at all there's any announcement, and we are second guessing here. We have no information at this point in time, of course. Once this announcement comes in, there might be a slight and temporary disconnect between the Indian domestic prices and international prices. But I think within 48 hours, that'll get again evened out, and the rupee-dollar parity will then again dictate the prices of gold in the Indian markets. I think at this point in time, gold still remains under pressure because the lower tops and lower bottoms formation still remains in place. And only above, say, the 30,400 odd levels will, on the MCX, will gold see bulls coming back here into the ring again. Barring that, it's just a technical pullback, and upsides are likely to be very calibrated and unlikely to sustain in the absolute near term.
Vijay, also, what's your sense now on the base metal prices? Because we've seen not much of a momentum coming in for that sector.
You're right, Manisha, because in the past 5 to 6 trading sessions, any kind of an upthrust has been on very small volumes, whereas declines have seen very large volumes, which tells you that there is a clear case of distribution at higher levels. I've talked about levels of, say, 106.5 on aluminium, which it's violated on an intraday basis today. I've talked of levels of 111 odd on zinc, which is very close by. These are basically support levels which these metals are trading precariously close to. Should you see a violation of these levels, especially on a closing basis, and if the volumes were to expand, that tells you that the bulls are completely on the ropes and on the back foot, and are unlikely to basically provide any kind of proactive buying support on dips. Once the buying activity and the buying safety net, so to say, comes off, my guess is there is a real threat of the bears coming out with daggers drawn and shorting the markets down.